Hi, welcome back to Summer Money. Well, our next guest says that many small to medium-sized businesses are losing out big time, especially when it comes to managing risk. But there's a trend afoot. Many of those same businesses are declaring cash is king and demanding payment up front. Well, joining us for some summer school is Christian Vollbehr. He's from Coface. Hi, Christian. Thanks so much for joining us. Just maybe begin by giving us a bit of context. What actually is Coface? I haven't heard of it myself.
Sure. Coface is a global service provider in the corporate space. We provide services to companies of all size and all business sectors around the world. We operate in about 100 countries right now, have about 130,000 customers, and cover trade at any point of time of almost about 400 billion euros. And we've been here in Australia now for a number of years, operate in different offices, also in New Zealand now.
So what do you actually offer your clients, though?
We offer trade credit insurance, which is the core business that we offer here in Australia for domestic transaction, also export business, receivables finance to improve cash flow, debt collection to make sure that you actually get paid as a supplier, and the last line of our business is then credit information or credit scores on buyers around the world.
So basically, if I'm a small business and I want to sort of manage all the risks surrounding my credit, I come to you, you've got the tools, you can help me, and you can also go and follow people up if they decide not to pay me.
Absolutely. I think it's probably fair to say we are the one-stop solution for companies that are looking for assistance to run their credit risk.
Okay. Recently, Coface conducted a credit risk management survey here in Australia. Why was such a survey needed?
It seems that there's still a lack of understanding of what the fundamental risk on the credit side can be. It is actually coming still as a surprise to me that about 60% of all Australian businesses do not have a credit management procedure in place. So they simply just trade, they do their business, and hope for things to come.
Okay. So you're saying that businesses need to have rules and regulations in place and systems in place that when things don't go as planned, when people don't pay up perhaps as expected, that you can implement this risk management strategy right away.
Absolutely. It starts for me pretty much with a business plan that should be in place in any organization. It should be followed and updated regularly. To just go with the flow is simply not cutting it these days anymore. I think companies need to be very vigilant these days, not just after the crisis, because we often tend to see that after a crisis actually the risk is tending to increase. There's more business failures that are still expected also going into next year.
Okay, so what did we really learn from this survey of Australian businesses? I believe over 500 businesses took part in the survey?
Yeah, that's correct. More than 500 businesses. We have been doing this now for a couple of years. Yeah. And it seems that, again, there's a lack of awareness of what are the tools that are actually available. Again, about 60% of the companies do not have a procedure in place. Another apparent situation that we see again and again is that companies don't look very carefully after their cash flow. Some of the other issues that we face is that the average outstanding dollars are still increasing, so companies are tending to wait longer and longer to receive their money. Right now we're looking at about an average of 60 days almost here just for Australia.
Right, and that means that they don't have that sort of capital to,
companies tend to, you're absolutely right, tend to be thinly capitalized, and since the financial institutions have also been quite cautious coming out of the crisis and tend to keep the money very closely, companies looking now for new solutions.
Well, let's take a look at some of the credit terms that have really, the findings of the survey. We can bring up a little bit of a chart that we have, and it shows that still the majority of Australian companies use COD as the most common payment method, which was down about 14% on year. What else do we get from that? Well,
we typically see that companies have come out of the crisis even more cautious than before. So on one side, in order to stay in business and to do more business, they are often pressured by competition to offer credit terms. However, since the crisis was...
instead of paying 30 days, they're offering now 60 days.
They're now offering 60 days just to stay in business, but that, of course, has a strain on the cash flow situation at the same time. So on one side, companies tend to be careful, but in order to go about their business and pay pretty much their bills, they need to do more business, and that's often at riskier terms, meaning on open trade account.
One of the other sort of things that you're really following closely is this need for an increase in transparency when it comes to credit history. In 2011, there are some changes on tap. Did you just want to get us across those?
Yeah, absolutely. Government has worked for a while on a new regulation called PPSR, which basically means that companies will have to register their interest, their securities, publicly, and that is going to kick in, as far as we can see now, in May next year, which will help a bit more to secure a bit more transparency in the marketplace, so that companies can be assured or be safer to actually get paid on time, and that their interest is really registered in this database, in this new Australian database.
Mm-hmm. Do you think the government has gone far enough when it comes to transparency for...
I think that there's still a way to go, to be honest, compared to some other markets, significantly, for example, to speak about Europe, where there's a lot more transparency, where companies are, in some places, even legally required to file their annual returns. Here in Australia, it's more on almost on a voluntary basis, and there are too many thresholds where companies can avoid in filing their annual returns.
And so for small, medium-sized businesses that are watching out there, perhaps in the quiet time, over the summer trading period, what sort of is the top priority? What should they really be nutting down and getting into order?
Right now, what I would recommend companies to do is to reinvestigate almost their positions, especially when they look at some of their larger customers, because typically if there is an issue with one of the larger customers, that can take down a business fairly quickly. So I would recommend that they do some investigation. If they can't do the investigation because they tend to be smaller, obviously, they do not have the skills sometimes, that they look at some sort of outsourcing, look for professional advice, whether they get this from companies such as Coface or from other partners that are in this marketplace, to provide information on their most important debtors, just to make sure that going into next year, they are on the safe side.
Okay, Christian Vollbehr, thank you so much for coming in to speak with us.
Thanks, Eileen.